This show is sponsored by my new business, MA Capital. I had success in my previous business acquiring companies before I exited earlier in the year. MA Capital is set up to support business owners on that journey, whether they want to sell now or they want to set up for a profitable exit later in the future. If this has piqued your interest and you'd like to work with me, head over to macapital.co.uk. So today we have on a guest who sold his first business over 10 years ago. Since then, he's created his own private equity company. He's been involved in a further 11 acquisitions, 7 exits, currently buying in the light industrial and construction sectors, and just casually buying some industrial estates and stuff as well in the meantime.
You make me feel so old. 10 years ago.
Welcome to the podcast, Nathan Winch. Guys, just a quick one. Over 75% of our listeners aren't subscribed. So if you are enjoying this, please show some support by liking, commenting or subscribing wherever you're watching the podcast. It'll allow us to keep getting on amazing guests and it's massively appreciated. Back to the show.
Well, thanks for having me, Matt. Yeah, it's great. Just it's been a bit of a whirlwind when you put it like that. You know, it's been such a long period of time to sort of get to where we've got. And I think we were chatting before, when you look back and you look at kind of how far you've come, it's quite interesting to see, isn't it, I suppose? Mm.
Tell me who Nathan was in school, just sort of take me back so I'm getting an understanding
of... Right. So I think I've always had that sort of spark to do something a little bit different. So I think in school I was the one to start the school's first newspaper. So I think back then, you know, I was already a little bit weird, I suppose. And then fast forward to university, I started a small sort of, in about 2007, started a small sort of web design agency with a friend at uni to make a bit of money, you know, for food and drink, basically. And then did a gap year where I worked in the NHS, and that's sort of where the actual sort of wider business sort of stuff happened, the activity happened, really. But yeah, so I was just kind of like the funny guy, I suppose, disruptive, but was able to get on with their own work. So I'd like disrupt other people, but would still do my own work at the same time. So and a bit of a floater, which is a weird term, but like I kind of got on with everybody. Do you know what I mean? Like I wasn't part of any clique or anything, but I kind of got on with everyone. So I don't know, really. I suppose that's the only way to...
Were you into sports and stuff like that?
I liked hockey at school, but I kind of was more into the social stuff, I suppose. But I'm a football supporter, but other than that, not really bothered, no.
Leeds or...?
No, Manchester United. Going through a bit of a tough time at the minute.
Yeah.
But we'll see how it goes. The legendary days are yet to come back. But what about yourself? Middlesbrough,
yeah.
Of course you are.
There's
of course
nothing
you
to
are.
shout about, really. Nothing to shout about.
Well, so swiftly moving on.
Yeah.
But yeah, so I kind of got myself into school. You know, I was, I suppose, an academic, but I kind of like to do my own thing as well at the same time. So it's kind of an odd mixture, I suppose. But yeah, I suppose that's me in a nutshell in terms of school and stuff, yeah.
When you left school, did you go straight into business or was it uni?
No, went into university. So my background sort of molecular biology, so which is a kind of a bit of a stone's throw away, I suppose, from what I'm doing now. But it's I sort of studied for 4 years at uni. As I said, I did a gap year where I worked in the NHS. So I worked just across from the LGI in Leeds, and whilst I was there, I was kind of got to do more and more. So I was kind of like a free placement for them at that place. So we were doing sort of cancer research in women, so ovarian cancer research. And one of the things that I was to do as part of my role was to procure for the department. So I'd buy certain things. And I got involved, and that's where I understood the NHS supply chain and how that worked, and was quite surprised and shocked, actually, because the NHS is sort of forced to buy from one place, and it's this framework called the NHS supply chain, which is more often than not run by a private company under tender. And what they do is they put to market different opportunities, so categories of product like gloves or cleaning consumables, things like that, and they allow people to bid. And back then, I mean, again, this is like 12, 13 years ago, it was all big companies that dominated that space. So what I did was I thought, well, how hard can this be? Because like I said, I'd already had that bit of, I suppose, an entrepreneurial streak. I thought, well, how hard can this be? So I kind of took what I knew and bid on an NHS contract, not thinking much of it. And then I think 6 months later, I ended up winning this share of a £40 million contract, and I was like, shit. Yeah, I've got no money. I'm still studying at university, and I'm a student, so this is a bit of a nightmare, really. I mean, it was a little bit more prepared than that, but that's the anecdote I like to tell. So I had to rush off, find an investor, set up a company. I hadn't even registered a company. So I kind of had to rush to do all these things and had like 3 months before our framework started. So did all this, kind of blagged myself, found an investor. I think I saw him on Secret Millionaire or something like that. And I just contacted him and blagged. I said, oh, you won't remember me from such and such event. I mean, I was totally lying. And he said, I know you're totally lying. I've never met you before, but I quite like how you've... So we got to meet Great Northern across from Peterborough train station. And he invested 100 grand in the business, basically. I can't remember when this will have been. It'll have been like 2013, 2014. And we just took it from there, just grew it from there, basically. Got on, built a bit of a little team, kind of only had equity to give away. Got a ex-director of infection control from NHS, because the category that we won was sort of hand sanitizers, cleaning consumables, fast-moving goods sort of thing. Because that was kind of my background, so that's kind of what we looked at to keep it relevant. And just grew the business, basically, to the point where one of our suppliers was interested in buying the business as a way of them getting into the NHS. So we talk about strategic acquisition. So they made a strategic acquisition of my business. Was easier for them to buy my company than it was to go out and bid and do all different things. So I think, like we were saying before, I had a bit of an identity crisis, I suppose, not knowing what to do. The deal wasn't massive. It was in the hundreds of thousands, so it was a lot of money to me at that time, So I kind of got a bit bored, bought some property, very traditional vanilla stuff, and then thought, well, I'll start another business. So I did, bid on an NHS contract. I managed to sell that business without any trading just because it had a contract, and then sort of did that another time after that and kind of thought, well, rather than starting things from scratch, surely it's easier to buy something that already exists and has a proven track record, and I can cut down the time horizon of getting in and out. Do you know what I mean? So I think that's what I did. And fast forward again, bought my first business, which was in the sort of Airbnb kind of sector-ish sort of thing. So would consolidate properties down and stick them on Airbnb, similar to rent, but it wasn't that at the time. So bought a business doing that, grew it a little bit, and then sold it a year later. And then kind of the snowball started to grow from there, really. And over the 5 years preceding that, we went from, buying things for like 30K to buying things for, getting on 6 million purchase price. So it just grew and grew and grew and grew, basically, from there.
Wow. So obviously you were doing acquisitions quite from an early age. Did you have anyone to look up to? Because acquisitions seems to be a bit of an in thing at the moment, doesn't it?
Well, it seems to be. I mean, it's a bit of a dark art, but no, there wasn't really any, other than like normal literature, like books and things, there wasn't really anything to follow or...
Were you studying that sort of stuff, or did you just come to this conclusion?
No, just come to the conclusion. I'd started and sold a couple of businesses, so I thought, well, selling the businesses where the value is for me. So when I sold that first medical business, I made more money in that week than the whole 5 years of running it combined previous. So I thought, well, that's where the money is. That's what I need to do. So it was just a logical way of thinking, really. I mean, like I say, my background is a scientist, so I thought approach it, the methodology of it is, well, if you want to make money, you follow this process and you do this. So that's what I did, and I did more of it. But I must admit, crashed into the walls a bit as I did it, because it's, I'd never done it before. Most business owners have never sold their business before. That's the statistics. So it was quite a difficult thing to navigate at the time, especially negotiating on that first exit. Didn't have a clue, and I was negotiating with this big public company. So it was quite difficult to to navigate. And even the professionals I got on board had never sold anything before, so it was really new. But as I did it more and more, I obviously got more comfortable with it, and then got into the buying side of it because I had resource to do that. So it was just like I said, I just kind of learned from doing basically, and I've made loads of mistakes along the way, but it's built us to where we are now essentially.
Is everyone looking at business wrong?
What do you mean? That's a difficult question. What do you mean by that, Matt?
So so I spoke to Jeremy Harbour, right?
Yes, yeah.
And the way I was sort of just studying sort of his language and stuff, and he described himself as a shareholder.
Yeah.
Now, I don't think many other business owners would describe themselves as a shareholder. They're either, they're doing the do, aren't they? And I think, in my opinion, I think people are looking at business wrong.
I guess it depends what the outcome you want to achieve is, I suppose. I mean, if you want a lifestyle business, then there's nothing wrong with just running a business and making money. If you're kind of wanting to scale and do something a bit different, I guess it's thinking of yourself as more of an investor than a business owner, because the two things are very different. And I tell this to the guys I invest in, because I've got some angel investments in different things. And one of the things I sort of talk about is kind of removing yourself from the business, because they all want to sell. That's the aim of it, really. I only make money if they sell their business. So the aim of it is to build to sell. It always should be. And I think you've got to kind of remove yourself from the business, because the only time the business becomes an asset or a valuable going concern is when you're not needed. Otherwise, when you sell your business, like I fell into the trap with my first business, is you're going to have to hang around for a bit, basically. So if your business is not kind of, let's say, running itself, you're going to be stuck, whether that's not being able to sell or whether that's having quite a protracted sale process where you're sticking around forever. You're in non-compete agreements, you're in NDAs, you're in this, you're in that, you're tied up, basically. But you can avoid all that if you kind of structure your business to sell in the first place, which is a process that should happen really early, like making sure that every process, every task that you're having to do is kind of built into the framework of your business. So you're either hiring people, you're setting up systems and processes. You've got to do as little for that business as possible for it to be attractive to, I guess, someone like us, because we don't want to buy something and it be massively reliant on the business owner, because they don't want to stick around forever. There's a reason they want to sell. So I guess kind of making sure you can take literally a 12-month holiday and it literally not affect your business. That's where you need to be, and then you're attractive to sort of acquisitive entities, really.
I think most business owners are in the position of they'd like to get to that point, but they're so ingrained in the operations that they don't know how to get to that point. And even if they would like to, it just seems impossible, because, like I said, maybe they're too ingrained in the operations, maybe financially they can't do it. But I think it just comes back to like the hockey stick graph. I think you have to be willing to sacrifice some personal income in the meantime in order to build that business which runs without you. So other than starting early, maybe putting procedures in place, would there be anything else, any other advice to business owners who are looking to set up a business to run without them?
A good management team, yeah, essential. It's all right us kind of posting online the deals that we're doing and we're achieving, but I'm a very small part of that happening. You are your management team. You're only as good as your management team. And I know what you're saying there. A lot of businesses they're quite small, I suppose, sub-1 million pound turnover, so technically micro businesses. And I think those businesses can't really afford big, great management teams. But like you say, it's about sacrificing and growing. And if you're doing it for the right reasons, you will get there. Like you say, sacrifice. I mean, we've all driven about the country in a beat-up course of trying to get sales. It's sort of how it works. It's the baptism of fire, really. But yeah, you've got to kind of, I think, having that goal. Write down what it is you want to achieve first, because otherwise you'll just scattergun and kind of not, do lots of things badly instead of one thing really, really well. So yeah, it's not impossible, but it does feel like it at the time. It does, yeah.
I think a lot of business owners are maybe scared of putting the prices up as well. Do you see that in terms of, you're just not charging enough? That's why you can't invest in your team.
Yeah, and I know a lot of business owners that I've worked with that have been in that position as well. So they think, oh, well, I'll not win the work. Yeah, but you will, because, it's about quality. It's not about price. And it depends on what you do. I mean, if what you're selling's very commoditized, then rather than go for the few and far between, lots of small customers approach, maybe try bidding on a contract. A lot of people don't even think to do that. If you've got the right accreditations like ISO and things like that, bid on a contract and start thinking bigger, because I think that's the first step of actually being bigger, isn't it? Is thinking bigger. Because you saying these business owners are trapped, it's probably because they think they've got to get the next customer whose lifetime value's 50 quid. It's you've got to shift a gear, really.
100%.
And it's a lot of risk, but it's like I say, you manage that risk, don't you?
100%. So you sold your business, you then started to acquire businesses. You did a little bit of property as well?
Yeah, I've done a lot of property, so mainly commercial now, but had a lot of residential property. I've kind of sold a lot of my residential portfolio now, but still have residential portfolio across the country, mainly in the Midlands and the North. So still do a lot of that, but it's all very straightforward stuff for me. And this is where the name of this show comes into effect, really. So you've got your fast pounds and your slow pounds. So in the industry, slow pounds are basically called accretion, value accretion. So over time, you have your stuff that builds up that's very stable and it grows slowly in value over time. And then you've got your quick fire stuff, which is your big trading business. It's commercial deals. So property for me is a slow value accretion sort of activity that is building a base for the business in the background and not really playing a front role, but it's there and it's great because a trading business allows you to just supercharge buying property. If we want to buy a property, we'll just go and buy it. We can either borrow everything or, we've got the cash to do it if it's cheap enough and stuff like that. So a trading business is essential. But what a property portfolio also does is when the business is kind of having downtime or it's in the sticks or through something like COVID, that's where your property portfolio kind of comes back and kicks into touch and you can actually borrow against it to help the business. So the two kind of work in parallel, really. But I kind of view property as a store of value, really. I think it's quite difficult to make property your main business. This is excluding estate agencies, proper businesses. If it's just property investment, I think that's probably quite difficult, especially from a standing start, because I don't know how I would have developed the portfolio I've got now if I hadn't have had businesses. I just don't think it would have been possible. But that's the fast pound, slow pound thing. People try and make a business out of the slow pound and wonder why it's slow. Yeah. You know what I mean?
Yeah.
So it's quite difficult.
So let's say a business owner's got 50, 100, 150 grand to spare. How do you know when to start building that slow pound property portfolio or reinvesting it back into your business?
Oh, well, that's for them to decide. Again, I think it comes back to what you want to achieve. I think obviously try and do creative deals to stretch that money out, but don't go silly with it. Don't over leverage. Business owners tend to always over leverage. I've over leveraged before and it's stung me in the past. So I think try not to over leverage, but do creative deals. I'd say go and buy a business. To be honest with you, I wouldn't bother with property. I'd say go and buy a business and build your property over time from the proceeds of that business. Focus on that business. Be in an industry that business owner knows really well, preferably, and kind of go from there, really, I suppose. And if not, buy a management team in if it's a business that they don't understand. So get somebody in that knows that industry. I'd probably say buy a business and then just get the properties over time. Buy 3 or 4 properties a year and just focus on the business because that's where the real return is. Property is quite a low return on investment. You want to be making 20, 30% ROI a year plus, don't you, for it to be a worthwhile investment.
Yeah, you know what? This is something I've been thinking about recently. People say it probably contradicts what I've thought up to this point, but people say, you said property is a low return on investment, but a lot of businesses are at that 10%, like the 10% net profit mark, aren't they? So
They are,
that's
but
an interesting one, really.
Yeah, I suppose they are, but just to kind of cut across, I mean, it's you might be 10% of revenue, but what have they actually invested in that business? That's what you ought to really value that 10% against. So if it's like you say 10%, let's say it's $1 million turnover, so they're making 100K net profit after tax per year. But how much did they invest to build that business in the first place? It might have only been 50K and they've built it over years, or 100K. Do you see what I mean? So actually, what's return on investment? But you bring up an important point. I'd say that's how you should look at property. So I'd flip it round and say you should look at property as what capital have you deployed in total. So you're not just talking about your own capital in the deal, you're talking about capital employed as well. So the way I look at property is you should have a figure where the total yield is what you want to aim for. So some people say, well, I've invested 50K in this property and and the profit's 50K, so it's 100% return on investment. But it's not really, because you've got to look at the money that you've actually deployed, not invested. So the money you've deployed is your own money. It's the bank's money. It might be money to fix that boiler last year that broke over winter. So you've got to think, how much have you actually deployed, not just invested? And then you kind of should measure investment against that, and that really stress tests it against, like you say, things like COVID, or, if you've got voids and stuff like that. So I usually go for 8 or 9% gross yield on total capital deployed. And if it's less than that, it's probably not a very good property investment.
Are you buying in the northeast?
A little bit, yeah. Got some property in the north. Well, I've got 2 in the northeast, and I got 1 big commercial property in the northeast as well. So, yeah, but they're part of they're to grow the business essentially. I mean, most of those are owner operated, so they're properties we operate out of. But it makes sense. I mean, they have a bricks and mortar value, so it all kind of adds into that value accretion again that we talked about. But yeah, I think you should look at it differently, really. Look at it as the money you've actually put into the deal from all parties. What's the return on that level? Because you'll find that most people, when they do that calculation, it's very, very low.
Yeah. So what made you want to start your own private equity company? How does one even start their own private equity
Well,
company?
I mean, you just call yourself private equity, don't you? And then you are. So it's one of them, really. Stick a bed in a room and it's a bedroom. I think it's, again, going back, it's realising that the selling businesses is what makes the money, and adding value from what we can add that normal business owners can't add. It's finding synergies in what we already do. So I think it's just the activity of it, and I do employ some private capital now and again from outside investors. That tends to be on a cycle though, so the majority of it's kind of my own money. So I guess in that sense we're private equity. So we're more like a boutique investment house really. So we'll go around and we'll have a friendly approach to the whole M&A thing. And business owners tend to like that personal approach. So we kind of keep it nice and simple. I've got a very small core team. There's only like 5 or 6 of us. I mean, we employ I think it's 52 people, full-time employees we employ, but that's in all of the businesses we own. The core team is only 5 or 6, including myself. So we try and keep it quite lean, because obviously if you're in a period where you've sold everything and you've got no income, it doesn't help to have a great big massive team. So I guess it's the team really more than anything else is what I'm trying to say. They're the ones that do the work and fill in the gaps, and I'm just there kind of grabbing the deals and doing the commercial deals, and then you've got to be able to pass it on to execute, because most business owners aren't very good at execution, and I think that's where things fall down a lot of the time.
Yeah. But I think you make a good point about, I know you say, it's like shut a bed in the room, it's a bedroom. But I think it's also, what you can take from that is like positioning, isn't it? Like you position yourself in the market, but also how you position, so for business owners listening, is how you position yourself in your business is ultimately what you are. So you can position yourself as a shareholder, as a business owner, or as a business operator.
Yeah, I guess a lot of it's a mindset thing, I suppose. Just presenting yourself in the right way. It's normal business at the end of the day. Present yourself in the right way that you attract the demographic or the geography or whatever that you're going for. That just makes sense, doesn't it? So if you want to buy businesses, God knows why anybody would, but if you want to buy businesses, then you present yourself as that and try and have a bit of a track record, as well. So have having had sold something or bought something ideally before you can do that. There's a lot of low quality out there, which tends to, there's not a lot of people protecting sellers, I don't think. So there's a lot of buyers out there that are very unsophisticated, that can trap sellers. So I think have some track record, present yourself properly, have a bit of a CV. So having done a deal, whether that's buying or selling or both, and I think you're onto a winner really, and a bit of resource as well. You can't do it without any money at all.
Yeah, that's one of the things I've written down actually, because we spoke obviously before this, and one of the things you said was never buy your
He's
business.
written it all down. I've got to be careful what I say.
Never buy your business with little money.
No.
I think that's a different message to what some other people in the industry are saying.
It is, and I'm trying not to be too contrarian on this, but yeah, I'd say not kind of try and buy something with little money. Like obviously save your money and do the best deal you possibly can, but have money or resource once you bought that business, because more often than not there'll be skeletons in the closet. You'll have employees leave that don't know that the process was happening. You'll have customer drop off. These things always happen when you buy a business. So, because it's a going concern, and a lot of the time, like you say, if it's a traditional business owner that's been in the business and you all of a sudden yank them out of it, it's going to have a material impact on that business and its, profitability. So I think having resource available, obviously try and spend as little money doing a deal as possible, so long as it's structured well, and you've got stakeholders that are part of the deal, so like lenders and investors, and make sure the seller ultimately gets what they're looking for, which more often than not has got nothing to do with the value of the business. It's often what their retirement figure is or whatever. So you've got to try and make the two intersect. But it's about really kind of having the resource to invest in the business once you've bought it, to correct the inherent mistakes that are going to happen as a result of buying the business in the first place, if that makes sense. So have resource, not chuck as much money to pay everything up front, but make sure you've got resource to support that business once you own it, because it might not be as profitable as first made out and things like that.
Yeah, I think you make a good point in terms of, I think people who've never done an acquisition before probably need to think that they need to buy business, for the full asking price with cash up front as well. Are you doing creative deals in terms of, using the cash in the business's bank account and assets and stuff? Or are you raising finance? Like, how are you?
Yeah, a bit of all the above, really. I mean, we do a lot of turnaround projects. So we do buy businesses for not a lot of money to try and save the business and the employees and the business owner ultimately. But we've done everything. We have bought businesses where we've paid everything up front. We've done a £5 million purchase where we paid everything up front. So it's not that we don't, but those are again, going right back to the start of the conversation, those are the businesses where the business owner is absolutely not needed. So I'm okay to spend what I need to spend up front. It might have not been all equity, there's debt involved in different things. But it's not unheard of, we've done deals where try not to use business bank account cash, because unless you've done your own cash flow projections with the sellers, you might be damaging that business by taking all the cash out of it to buy the business. And then if the business, goes south and doesn't work and falls into insolvency, you'll be picked up on the fact that you've done that. And, that could be made, you could be made personally liable. So all this sort of, not to scare people to never do a deal ever again, but just be conscious of these things really. Make sure it's a solid business, have done your due diligence, and make sure, the seller's legitimate and everything else, because, I've seen it when it goes really wrong, and it can go really wrong, so, and it can cost you a lot of money. So
do you think that's because they've not worked out the actual working capital requirements? And then
probably, yeah. I mean, who's there to really tell people what to do? I mean, this is why you probably shouldn't look to buy a business unless you've set up and run a business for several years, because you've got to understand how business works first, because sort of acquisitions is kind of a different thing altogether. It's like a different level of business, and it requires, different skills and different mindsets and different, people to be involved. So I think understand a business first. If you have never run a business before, I'd definitely advise against it. Yeah.
What do you think some of those skills are that you need for acquisitions?
I think good risk management, so understanding that you're taking on something else that's worked well in its current format, but you're changing the format, so managing risk. I think having an eye for detail, so I'm quite detail-oriented, quite OCD level detail-oriented.
Would you describe yourself as an entrepreneur or a business owner? Or?
That's a difficult one. People call me an entrepreneur, but I kind of feel that's overused, that term. I don't know really. I'd probably see myself as an investor now, because we don't just acquire businesses; we invest in other projects and businesses as well, and property, like you say. So I'd probably say an investor, which is a catch-all thing. But yeah, I suppose an entrepreneur, because we do things differently. But I think entrepreneur is not really to do with business. I think it's an approach to. It's how you approach things, and it's how you think, and it's how you behave. I think that's what an entrepreneur is. It's not necessarily business. You know, many artists can be entrepreneurial in the way that they work and stuff like that. So I think it's more of a behaviour being an entrepreneur than it is like a status or the activity that you do. Do you know what I mean?
I do, yeah. And the reason I asked the question is because a lot of entrepreneurs aren't really detail orientated. And you mentioned you've done uni for 4 years as well. That's quite uncommon for entrepreneurs as well, isn't it?
It's definitely helped. I mean, it's made me look at things differently. So like I said, I'm a kind of a scientist first, so very methodical, analytical, so quite detail oriented. So we'll spot problems and we'll see them before they happen. And my team are kind of similar, but I try and make sure I employ people who are very entrepreneurial as well, which I do. So we've been successful with that. But yeah, I think risk management's an important one, because I think when you get to the size we're at as well, you've got to unfortunately be a bit more corporate, and you've got to manage risk because there's lots of different things, lots of different stakeholders. You know, there's cultural differences, you know, in terms of one business will have a very different culture to another. So we've had that with businesses we've bought and integrated where the cultures haven't met, and it's been very difficult, and employees have kind of not worked well together. So there's all kinds of different things, you know, stakeholder engagement with lenders, investors, sellers. It's kind of like becomes this great big thing. And this is what I'm saying about acquisitions being different to just running a standard business. There's all these different new skills and layers to it than just running a normal business.
But would you still advise people to acquire another business?
Oh God, yeah, it's the best way to grow. If you've run a business for 5-10 years and you're kind of your customer acquisition's pretty crap, you know, and you're thinking of ways to grow the business, buying another business is fantastic. Absolutely. I'm probably being a bit too negative, but I'm just kind of trying to highlight that a lot of people go at it very positively and things can go wrong. Yeah. Like we've had an acquisition where we've lost just over £1 million of cash because it went wrong and it didn't work out. So, and we thought we'd done as much due diligence as we can. There were skeletons in the closet that we just couldn't have found, you know, no matter how much due diligence we did. You know, there was headaches with the sellers and things like that. So there's lots of different things that actually you can't anticipate, you know, no matter how good you are or think you are. So things can go wrong. You know, it's
what
not
happens
all,
in that scenario when £1 million lost? Like,
it's £1 million lost.
Wow.
It's just like, I mean, what you meant to do. So it's kind of like, and it wasn't all like lost all in one go. I mean, we tried to save the business and stuff like that. So it was very, very difficult time. But that's where I kind of, you know, got into the world of insolvency and found that actually there's some good opportunities here, but also the fact that this, you know, limited company kind of thing is kind of more of a facade, really. Nothing's limited liability. You know, if things go really wrong, you know, anything can be made. You can be made personally liable for practically anything, really. And it's how you kind of deal with that and move forward. So, but on the back of that, enough successes that's kind of, you know, absorbed. But yeah, things can go and do go wrong, which is why it absolutely scares me to death when I see people online going into M&A and they've run a tuck shop. You know what I mean? I feel sorry for the sellers that get involved with these people. But yeah, it's a difficult one to comment on, really, I suppose. But it does go wrong, and when it goes right, it's fantastic. You know, and I'm the biggest advocate for buying a business as a way to inorganically grow. Yeah.
how can business owners upskill themselves? Would you advise education, books, mentorship, the same, that sort of training?
I think books, definitely books, are by far the best thing to do. For the terms of value that you get for the money you spend, books are definitely the best return, because everything's out there, that you need to know. And you look at people that have done it really successfully. There are people online that try and teach this stuff, and I know they've had massive failures, and that's why they've gone into teaching it. So you've got to be very careful with people out there. Probably mentors. I mean, I say that I've never really had a mentor, but
I find that really interesting.
I think because I've just kind of and that's I should have done. I mean, I'm not saying that's the right thing to do. It's absolutely not, because I wouldn't have made the mistakes possibly that I'd made. I mean, the only real mentor I had was the investor in my first business, but his motives were different to mine, right? He wanted to make money. And that's the main thing to remember with investors. They want to make money. They're not necessarily always completely aligned with you. So they don't really make good mentors. I think find somebody to work with that's got no commercial interest in what you do, and try and kind of get advice from them. Being a mentor by nature should be free. You shouldn't have to pay for a mentor. That's a coach, you know what I mean? Or like you say, an education platform or whatever. But I think try and find, but they're difficult to find, because you said to me before, they're busy. They're out there, they're doing it, they're busy. But it's not impossible to find these people. I mean, like I said, I blagged my way to find an investor, so it's not impossible. And try and be a bit different, don't fall into the same homogenous blend of the crowds that are out there. Keep yourself unique, I suppose. And that's easier said than done, but I think you know what I mean.
Yeah, I get what you mean. I think, so would you pay for mentorship then? Or would you just, because I think you can get mentorship from people and they don't know that they're mentoring you, can't you? Especially nowadays with books and YouTube and stuff like
that's
that.
it, yeah. And they're often the best, I think, as well, because a lot of people give away a lot of value for free. I think people forget that. It's difficult, because I'm trying to think of when I was starting again. I mean, we pay for consultants in our business now, but that's different. We're not at that sort of stage. So I guess maybe I would, but I'd probably say I probably wouldn't pay for mentorship. I'd probably read books and speak to business owners that have sold their business, actually. In fact, that's just come to me now. Maybe speak to business owners that have sold their business. What process have they gone through? Why have they sold their business? What tipped you over the edge to say, yeah, go on, then I'll go with that deal. And maybe find out how the deal's structured. That might be a good way to do it, actually. And you can find, you can build databases of these things. You just can, get a bit of software or something, or AI, to scour a company's house where there's been recent changes in ownership, and contact people and say, oh, I see you've sold your business. Do you fancy a coffee? You're obviously loaded, so that's you're a good person to know.
You can buy the coffee.
And maybe network with sellers. I mean, everybody forgets about sellers. I see all this stuff online, become a business buyer, be a buyer, blah, blah, blah. Nobody thinks about sellers, and the things that they've got to go through and negotiate. So I think, maybe get in touch with sellers and see how they've structured the deal. And business owners know business owners, right? So, you might get referrals and stuff like that. I think, networking, definitely. Mm-hmm. Yeah.
You're in a multiple of sectors?
Yeah. We're currently in construction, distribution, logistics, and energy at the moment. We do have some angel investments as well. So Blue Bricks magazine being one of them. So I'm an investor in that, and a couple of other small businesses as well.
They're all building to sell, right?
Yeah. Everybody's building to. Well, that's what I tell them to do anyway. Because that's how you sell, become attractive to a buyer. So, different sectors, quite sector. I wouldn't say I'm sector agnostic. I mean, I'd probably say my sectors are, I suppose, in terms of me as an individual, my sectors are property, healthcare, and that's probably it, really. Maybe engineering. But it's definitely healthcare. That's my background, so that'd be my sector. But in terms of a company, us, we are whatever our management team are. So we do have logistics, distribution expertise, 30 plus years. We do have energy. We do have construction, 15, 20 plus years experience on the team. So it's not that it all has to be me. And I think, again, that's the divergence of thinking with normal business owners, where it's always all them, isn't it? Well, you need to get away from that as well. And I get it might seem like you can't afford to employ people to do things, but you also can't afford not to at the same time. Like, I've not always employed people where I've afforded to be able to do it. I've just done it and said, right, well, let's what's the probation period? It's 6 months, isn't it, or whatever. Employment law, another thing I don't really know, so we've got somebody for that. But yeah, I'll say, right, 6 months probation. If I have 6 months salary set aside, we'll try it, we'll go, and hopefully they add value. And if I've picked the right person, they will. So I've done that before, you know.
So are you always looking for talent or strategic people to bring on board at the holdco level?
Yeah, all the time, yeah.
To add value to them.
Yeah. So not necessarily always like actively hiring, but I'm always looking for talent, and I think that's got to be one of the a business owner's best skill. Like, I've historically never been good at recruitment, and I think it's quite difficult actually. It's probably the most difficult skill in the business is recruitment, because you can get it really right and you can get it really wrong, and when you get it really right, actually that's where magic happens, isn't it? I mean, there are people out there who are risk averse enough that they're as good as us, but they're happy with the job, you know. And I think those are the people you want to find, very sharp, turned on people with experience that know what they're doing essentially, and you know their stuff.
Just on that point, then, do you approach businesses quite transactional, right? With buying and selling and things like that.
You've got to. I think you've got to really. There's always one person on the team that's got some emotional attachment. So whether it's because it's in their industry, or it might be a friend of a friend, or it might be a referral or whatever, somebody's always got some emotional attachment to it. But I think you've kind of got to step back from that. And I think that's why sometimes we'll use consultants, is to have a fresh, unbiased pair of eyes on what we do. So I try and be transactional, but you can only be transactional to a degree. I mean, when you're dealing with people, you're dealing with people. So it can't be like we'll come in suits and ties and totally railroad everything. We're not that sort of thing. So, but you've got to be commercial, I think's the right word. Transactional's probably a bit harsh, but commercial's probably the right word. Yeah.
Because what I'm thinking is look, you have to look at it like that. But how do you then keep the staff on board with the culture? And because if the staff know you're going to sell this business in 3-5 years time, how do you keep them on board and motivated? I think that's probably one of the trickiest things, I would say. So it'd be interesting to see your take on that.
So I've got to admit, I've probably been quite lucky with that. We've had stuff that hasn't worked, first of all, to kind of prefix it, but we've also had sort of businesses where it's worked really well. So people know what we do when we come on board, but we kind of don't always necessarily buy to sell in the short term. Like, it takes time to add value, and sometimes we might buy other businesses that we want to integrate and bolt onto what we've got, and that requires the team as well. I've not had too much bad luck with that. I think if you explain the process and you make sure people feel safe, which ultimately they will be, there might even be pay rises if you can kind of intersect their goals with your goals, there might even be pay rises for certain members of staff or across the board if the company meets certain targets. So it's get them more engaged. So what I've found is I more often than not, and this is feedback we've had, so this is not just us saying this, we often engage the workforce more than the previous owner did. So the previous owner, probably again a mindset of it's all me, I've got to do it all, probably don't fill their employees in with everything that they do, So if they've got a deal coming or they've got something happening, they might not tell them till the last minute. Like with the you buying the business, it's always told at the last minute after completion. Whereas I'm not saying it's always the case, but maybe if they're kept on board with what's happening, it might be easier. So I engage people more to feel like they've got ownership in what we do, because they do. If we grow the business, we always make sure it filters back down to everybody else because they're the ones doing the work and adding the real value. You know, we're just doing paper-based things, whereas they're actually driving and growing the business. So I think it's, again, back to that scary word, stakeholder engagement, really. Keep everybody in the loop is probably the simplest way to put it.
And are you letting them know from the outset, look, the plan is to sell this business, but that's not going to be until 5-10 years time? But are you letting them know from sort of in your initial...
Yeah, quite early on. So it's not always the same with every, it's not one glove fits all, but I try to keep people in the loop as much as I possibly can. Obviously, some things are commercially sensitive. You're in NDAs, different things like that. But beyond that, I do try and keep everybody involved, particularly the management teams of the businesses, because more often than not, they need to know to facilitate whatever it is I want to do. So, engagement, I think, to put it in a nutshell.
Yeah, that's the takeaway I've got from that as well. Is keeping the workforce engaged, and that makes a lot of sense as well. Actually, are you actively looking to buy at the moment?
We are, yeah. We're looking at different things. So we've made a purchase in September. We've got another couple currently in the pipeline. We're not actively searching, so we have a process of deal propagation, and we're not actively running that at the moment, but we are in the process of purchasing things, yeah.
Do you think that's the most important thing, is that process, like that deal sourcing, I guess, like filling
Probably,
the pipeline
yeah.
at the top end?
Yeah, I think so. Developing lists, having like proprietary deal flow, so we've never bought anything on market. So everything we've bought has been off market. Not that that's the right thing to do. Like I've got colleagues in other businesses who have bought things from brokers and things like that. But it's not that I would never do it. I just never have. Like we've always found we've got an in-house deal team looking for deals.
How many people are doing that?
2 people do that.
2 people all day just spending.
Pretty much, yeah. So running the systems, like we've developed our own software to search for businesses like that fit our criteria and filter to whatever it is we want to do. So we've kind of, again, probably quite a methodical approach to that. So I'm sure there are other sophisticated buyers that do, but I don't see many people that have that kind of approach to it. Like we've invested money to build software and have an in-house team and stuff like that, because if buying and selling businesses is what you're planning to do, that is your business. So that business needs to be equipped like any other business.
Itself as a proper business. Yeah.
Yeah.
Can you talk a bit more about the deal that just went through in September?
Yeah, so that was a deal to buy a small distribution business. It was literally down the road from the distribution business we own. In fact, it was one of our customers. So it was a bit of vertical integration, they call it.
When you say small, Nathan, what sort of revenues and size are you actually talking?
So this one was just over £1 million a year revenue.
But I think that's important for people who maybe listening to this. That's the level of thinking that where you're at,
I think so, yeah. Well, it all depends again, doesn't it? I mean, the business that we own that we're going to integrate this in is a £3 million business. So we're hoping that it becomes a £4 million business or more, with the synergies. And obviously there's not just revenue addition, there's also cost savings as well. So like fuel synergies, that's a big thing as well. So I think the 2 businesses combined would spend around £15,000 to £20,000 a week on diesel, whereas now we've combined them, we've nearly halved that. So that's a saving of like 10 grand a week. And then there's other things like accountants and stuff can be consolidated and all this sort of stuff. Back office functions, like our back office function, can handle both businesses. So there's different cost synergies like that. I mean, we don't make loads of redundancies. That's not the sort of business we are. But that's another saving that I guess other investors can make if there's dual up or there's people that want to leave the business or are not interested anymore. You can develop packages to help them move on. But yeah, lots of cost. The cost synergies are where I kind of quite like it. Adding revenues, I dare say easy. I touch wood. Adding revenue is easy, but the integration, the synergy is where it's hard. But that's where the most value is.
So how much involvement are you in this business that you acquired in September on a day-to-day basis?
Too much at the minute.
And I think that's what people don't really talk about, do they?
No, they don't. I mean, I like to like I say, we build these things to not be involved. Like we're investors, so we're professional investors, so we won't buy something if we have to run it. I mean, we'll be involved to fix things that are broken or, get new contracts. So I'm often working on winning new contracts for the business, like bigger scale stuff. But at the moment, it's been an easier integration than we thought. But then they're both in the same sort of town, and they both do the similar thing. So it was never going to be too difficult. But there's been certain aspects of it that have been difficult where I've had to get involved.
What have those actually been? Have there been like?
I think cultural differences again in terms of how the two businesses operate. So they might be in the same industry, but their approach to client acquisition and working hours is very different. There's slightly different pay in the businesses, which is always a mega headache. So there's all those kinds of key differences that we try and obviously find a solution for. But yeah, it's been relatively easy actually, I must say. And it's just kind of bringing those customers off, preventing customer drop-off. We've not had any customer drop-off so far, but it will happen. But hopefully not. So it's just kind of integrating that back office team and making sure that the systems are different. So our transport and all license systems are different. So we're either going to consolidate into it. So there's a lot of little background things that you've got to do, really.
Mm. And you've got more deals in the pipeline?
Yes, we've got 2 in the pipeline at the minute that I strictly cannot talk about. But yeah, so we're still active.
In the same sector, or are we?
No, in a different sector. So we're looking to get into a different sector quite heavily over the next couple of years, which will all be out there eventually.
So what does your day-to-day look like then? I know obviously you're integrating in this business now, but what does that actually look like?
Day to day, so coming and doing podcasts. Day to day, it's meetings, emails. I'm mainly seeing bigger clients of these businesses. So meeting them, seeing if there's any more work they need to do, and more often than not, we can, bump up the work we do with key blue chip clients by 20-30% just by going and seeing them and saying, actually, did you know we do this? Did you know we bought this other company as well that do this? So that's kind of what fills my time, is trying to add value to clients, incumbent clients, win new clients as well, and that sort of thing. Running the business in terms of my business, the private equity stuff.
Are you building that to sell as well then?
That's an interesting one. You could. I mean, in theory, you could. I've no plans to do that at the minute, but yeah, you could do that. I mean, it's the same as any other business, right? So you'd make yourself redundant from that business. So you need a key deal team, I suppose. It's kind of like Inception, isn't it? Really,
Yeah.
But you could, yeah, and that does happen, by the way. So I'm kind of have some involvement and know a few people at Mercia. So they're a big investment company, huge. And they buy other investment companies. That's one of their strategies at the minute. There's nothing going on there, but that's just so it does. It does happen. Not yet. It does happen though. Yeah, it does. So, but I haven't been building that business to sell actually, but maybe I will.
It's interesting, isn't it? How you're telling people to, like your portfolio companies to build to sell.
And I'm not.
Yeah.
I kind of can. I suppose it's kind of a different thing, isn't it? But you can. Yeah, you can. Yeah.
Interesting. Are you happy with where you're at?
I am, actually. I think there's a long way to go, but I am. I'm more happy than I'm irritated with certain things that we need to fix and change. So yeah, and it's kind of like, but like you say, it's building something that works for you as well. So you've got to be happy with what you're doing. Otherwise, this is all a nightmare and it's totally pointless. So because you'll go a long time not making any money, particularly in our sector as well. Like we try and not take too much out of the businesses that we own. The idea is to sell to get that significant liquidity event, is what it's called in the industry. That's where you make your money. You can pay yourself out of the business, but that often kind of sucks value out of those businesses. Even if it's kind of like dividends and it doesn't show up in your P&L, a buyer's still going to say, oh, well, you've still extracted cash, you've still done this, you've still done that. But sometimes doing that actually makes sense, because if you can demonstrate you've taken money out of the business, there's money to take for another buyer. So if you want to sell, you're demonstrating that actually there are discretionary owner's earnings there if you want them. So we try and find a balance, really.
Are you only buying in sectors where there's private equity buyers lined up?
Yeah, we are really. I think we try and go at sectors where, first of all, there's fragmentation. So there's lots of small and micro businesses, like £1 million a year revenue and less, because there's roll-up opportunity there. So transport, logistics and warehousing, for example, you've got a very disparate industry. So you've got lots of really tiny players and lots of huge players, but you have nobody in the middle. So these huge players, they're not going to waste the time buying these little tiny players, whereas what we do is we fill the gap. So we'll do a bit of roll-up with some smaller entities, which will build something that actually is attractive to those. So we're kind of picking it up and passing it on, essentially. So we look for industries that have got that fragmentation. And there are a lot of them out there. So you've got to have some goals and some strategy to it as well. It's no good saying I'm just going to go and buy a business and it's going to make profit and work for me. You know, there's got to be some background strategy to it, or maybe that's just because that's what our business is, that we've thought about that so much. I'm not saying you shouldn't go out and buy a business and just have that business for the rest of your life, but if you want to make buying businesses a business, there's got to be a lot more to it. Yeah, definitely.
Yeah, that's interesting. So you would say, to do it successfully, you've got to have sort of that buyer lined up, you know, somewhere along down the line.
Not necessarily lined up, but an idea of who they are.
Yeah, I mean, are people buying in every industry?
Yeah, but there's more in some industries than others. Yeah. Like I say, there's more activity in industries that are fragmented, and there's more activity in industries where, there's the opportunity to do that. So, like, people want to sell. Like, there are industries where people don't want to sell because the business model's almost perfect, and they make money and they think, well, why would I sell when I can sustainably make money forever? Like they've got really long-term contracts or something like that, or some established value. But yeah, there's activity in every sector, just different levels in different sectors. Essentially, it's about finding one where you can achieve the goals that you want to achieve. Because, like I say, it depends on whether you want to buy a business or whether you want to buy and sell businesses, because the two are different.
Yeah, it's interesting that I never really thought of it like that.
From my point of view, anyway. I mean, I'm not the guru or anything, but from the way I look at it is, if it's different, if this is what you want to do versus you want to just buy a business versus you own a business, you want to grow it by buying a business, the three things are all different. Do you know what I mean?
Yeah, it's definitely something to think about. You mentioned you're happy now, but there's a long way to go. Where is that destination for you?
So we're trying to reduce our leverage at the moment. So we're trying to have less reliance on stakeholders like lenders and investors. So we're trying to reduce our debt, which we've done. We've reduced our debt by something like 80% over the last 2 years. So we've just been quietly head down, grafting away, paying off creditors. We've got active turnaround projects which are still happening that we need to still realise to turn them around and then to grow them. So it's a bit of a longer, it's a bit of a longer time scale for turnaround projects, because you've got to fix them first, then you've got to grow them. So we've got a couple of those going on. And I guess being in the sectors that we know we want to be in longer term that we're not at the moment. So there's different, it's not that we're in a bad place and we need to get to somewhere better. It's just we know where we want to go and we're not there yet. So until we're there, it's kind of grafting, and we're happy with what we've done, but there's still stuff to be done. Yeah.
So would you say this works in any industry? I think that probably goes back to what you said, that the three different things: buying and selling businesses, buying a business, and then buying to grow your business. I think that sort of answers that question. Do you know what I mean? Because
I do know what you mean.
Yeah, like, does it work in any sector? But I think
it does. There's always people, like, everybody targets retirees, don't they? So people that want to retire, and there's obviously people retiring in every industry, but there are some industries, I guess, like engineering's a good one, where it's often management buyouts. So the owner is bought out by the management team, so it's not external buyers. That happens quite a lot in engineering for whatever reason. It's probably because they tend to be man and boy businesses, you know, that people grow up in them and stuff like that. So it does, yeah. So it happens. It's just like I said to you before. Some industries are more active than others, and that can change. Like private equity, they're like strange beasts. They change their mind a lot, and they're like, right, this is the sector to be in. You know, at the moment, private equity sort of in general quite like recurring revenue businesses at the minute. A big one actually is that I've seen from my experience is storage businesses. You know, self-store. You know, that like whether it's containers in a field all the way up to like Big Yellow or whatever they're called. You know, the ones where you hire a lockup. So that those are quite attractive to private equity at the moment.
It's a huge market, isn't it?
It is. Well,
it's huge in America, and obviously
yeah.
what goes from America comes over here, doesn't it?
Exactly, and I think one of the reasons is the lifetime customer value is actually higher than it's normally perceived. So you might think, oh, I'm moving house, I'll hire this lockup for 30 quid a month. I'll get rid of it in 3 months and I'll shift my crap. And then they're like, oh, it's all we can just leave it there, can't we? There's no rush to and then what turns into 3 months can be 5 years of customer value at like 30, 40, 50 quid a month. So they're very recurring revenue businesses. So you know, investors are quite hot at how long that lasts, I don't know, but they're quite hot on things like that, really. You know,
I think you spoke about customer value a couple of times there.
Yeah.
I think you talk about sort of upskilling yourself as a business owner, but actually when you do that, you'll probably make your own business better as well, even if you don't actually acquire a business, because you'll then understand what is a good business model, what's not a good business model, stuff like.
Well, it's not just that as well. Have you like wrung out all the organic value in your own business first? Like you can always go a bit further. Do you know what I mean? Like, are you acquiring customers in the best way? You know, are you doing things? Are you as efficient as you could be? Like, there's probably a lot of and this is the lower hanging fruit as well. Like, you don't have to go out and buying a business is complicated. Can you grow the profits or revenue or cut costs in your own business first? Like, is there an extra 100 grand a year you could squeeze out of your own business first? And then actually you might think, I don't need to buy another business actually, because I'm getting to where I need to be. So yeah, think about your own business and this is why I advise it should be business owners that go out buying businesses, because, you know, are you a strong enough foundation yourself first? Have you really got derive the value that you can really get, you know? And there's more often than not, there's extra work to be done, and that you actually can increase that profitability of your own business first.
Mm-hmm. So I'm looking at a business at the moment. It's in the manufacturing sector, which I have no idea of.
This is interesting. All the details.
So manufacturing sector, which I don't come from that background.
Yeah.
2 million turnover, 300,000-ish EBIT or adjusted EBITDA. What would your advice to me be?
Look at that adjusted EBITDA. So adjusted. How is it adjusted? So sometimes there'll be add backs that don't really exist. So I think really focus on that adjusted EBITDA and really drill down into that and get the business owner to really justify how they've calculated that, because there should really only be one-off costs. You know, any owner's drawings that aren't dividend related. I mean, what else could be in there? Because there's not just add backs. There's subtractions as well. So you might say, well, actually, you're saying that you're taking that out of the business and it's for X, Y, and Z, but actually that's a key role in the business. So I'm going to have to fill that role when you're gone. I mean, it's all the normal stuff, basically. You already know this. But, you know, you can have add backs and take backs as well. So there's you know, you've got to really drill into that, because, you know, that 300k may suddenly actually be only 150, you know. So relying on adjusted EBITDA can be quite difficult. And also look at the net profit as well, because I think the only reason anybody would look at EBITDA is if they were going to pay off the finance in the business. So obviously EBITDA, earnings before interest, taxes, depreciation and amortization, basically means it's just one level lower than operating profit and one level higher than all of your finance, depreciation, you know, and costs which don't relate to the operation of the business, but perhaps relate to, I don't know, some capex in the past or something like that. So yeah, really look at that adjusted EBITDA. What do they manufacture? Or can't you tell me?
Garage doors.
Right,
roller
garage
shutters,
doors. Oh yeah, you've told me.
garage
Yeah,
doors, roller
I mean,
shutters.
look at the customer acquisition. How do they acquire customers? What are they spending to acquire customers as well? I think that's important. Are they targeting a certain demographic, or are they are they local, or do they do national? Like, look at all that different sort of stuff.
Because that's value add, right?
Yeah, exactly. Yeah. So how are they acquiring customers, and are they doing it successfully? I mean, they must do. It seems like a sizable business, but look at how they're doing that, and if you can maintain that, is there anything owner specific involved in attracting those customers? Because that's another way for you to not chip away at the value of the business, but say, look, actually, that'll disappear when you go. Like, for example, if someone's the face of the business, those are the worst businesses to buy, because as soon as that
But
person's
they all say
gone,
they're not, though, right?
but they all say they're not, and we've bought them, and more businesses we bought than not bought have been owner reliant. Yeah, where they've said they're not. Oh no, I can go on holiday. But they go on holiday and they've got their laptop, they've got their everything with them, all their mobile phones and stuff and that. Yeah, so yeah.
So just on the face of things, would that would that be something you would consider? Industry, revenue, profit. If that was just presented to you, would you be like, I'll look into it more? Would you say no, actually, because maybe I can't find, or I know there's not like a buyer on the back end for it? Like, what would your thought process be with that just limited amount of information?
If I thought that there wasn't really any exit opportunity, I probably wouldn't buy it.
But do you think there is in that sort of...
Oh, yeah, definitely. Yeah, definitely. I think it's, like you say, you line up your strategy first. But it's like, I mean, I'll take it back to property, because I know there's a lot of property investors online and watch these sorts of things. You wouldn't get into a bridging loan if you didn't know what your exit was going to be. It's just the same thing, really, unless, obviously, like we said again, it's just a business you're going to buy and live off, I suppose, and get involved in, and there's nothing wrong with that. That's great. But if it's not, think about what value you can add to it and how you're going to realise that value. So it might be that you hold on to it forever and you earn what you're going to earn as an owner, but make sure it's always in a position that you can sell it on. You know what I mean?
Yeah, 100%. You mentioned like drilling down into the numbers there, but so a follow-up question to that would be when, because I'm due to have like an introduction call this week actually, but obviously I don't want to get on the call like tell me the truth, like you know what I mean. So like how I think that's
Yeah.
You mentioned business buying as a dark art, and I think maybe it's down to that negotiation element of it, because obviously I don't, like you say, I don't want to get into the call first time I've seen them and like
Ripping them to pieces.
yeah. So like at what stage, I guess my question is that how do you play the negotiation from like initial call right the way down to right, I want to really drill down on the numbers now?
Well, what are you planning that introductory call to sort of, what's the content in your mind of that introductory call? Because I mean, the key is in the name, isn't it? It's introductory. So I wouldn't be drilling into anything like that now. I'd get to know the customer who is the seller. I'd want to learn more about them, what they're trying to achieve, like why are you selling this business, first of all. I mean, that's always the first question. Why are you selling this business? What are you trying to achieve off the back of it? Are you retiring? Are you wanting to spend more time with the family? What does that look like? And just remember, you're trying to facilitate what they're looking for. And this is what people forget. You're trying to help them achieve their outcome as well, which is more likely to help you achieve yours, which is buying the business. So, really drill into what they want, I would say. And due diligence will start when you get solicitors involved and stuff anyway. So you can start kind of looking at it then. And once you've kind of built more of a rapport with them, you'll find it easier to be a bit, stripping down, because you'll have spoken to them several times first.
How long would you expect that introductory call to last? Like 15 minutes, half an hour?
I don't know, yeah, half an hour to an hour, maybe.
Just finding out a bit more about
Yeah.
why they're looking to sell. It says it all in the brochure, but it's probably best off going like and asking those questions again. And so then next steps, would you say, is visiting them on site?
Yeah, visit on site, speak to the people there. Obviously you want to have a level of discretion around that. So, because you might not buy the business, so you don't want to scare employees. So, I guess, have your own story about why you're there, or the business owner might kind of introduce you as somebody, I don't know, whatever. Because you don't want to upset the business owner's business if you don't buy it, So I think there's a bit of that as well. But yeah, I'd probably speak to them a couple of times, a couple of calls, and then go and see the business. Have some financials, because I assume, is this through a broker, is it? So you'll have had very high level financials. They call them IMs, don't they? Information memorandums, which have got very little information in them, and more often than not, copied and pasted from another IM. So getting information, and the more you can do with the business owner directly, the better, because most business brokers, I say most because they're not all the same, obviously, but most business brokers don't manage seller expectations very well. So, your business is worth 10 million when actually it's probably worth 500K, these stupid things, and they might have paid a fee to list. So, do as much as you can directly with the seller rather than with the broker.
Yeah. That's a nice bit for free consultancy there. Thanks for that, mate.
You'll get an invoice later.
Yeah. But, just to sort of finish this up now, mate. So what do you think has had the biggest impact on you in terms of, what mindset have you adopted, or what skills have you learned and able to sort of get where you are now?
I think be less emotionally attached, because that's where you start making mistakes. I guess this is different with different people, but I guess put the ego to one side. So when I say that, I don't mean everybody's egotistical and needs to, drop it. I say, do things for the right reasons is how I kind of put it. Because some people buy a business just to buy a business. Well, that's not really the right reason. Are you buying a business to grow your own business? Are you wanting to develop a lifestyle? Do it for the right reasons. Be more into the numbers, I think, as much into the numbers as possible. Scrutinise bank statements. It's no good just looking at, an accountant, chartered accountants, management accounts. You need to look at the reality of it, and reality is always cash, right? So I want 12 months bank statements, which is the only way you'll be able to assess the cash flow of that business anyway. Because even if you have a cash flow forecast or summary, you can even manipulate those. So you want to see bank statements. Is it cash generative? If it's cash generative, they're always great businesses anyway. So if it's producing surplus cash, because a business can be profitable but not cash generative. So and many people don't realise that. In fact, it can be profitable but cash flow negative. If they're paying off debts at high rates, or if they're accelerating payments or whatever. So bank statements. And if you can, look at customer feedback and things like that. And again, how they acquire customers, that's a really important thing, because will it grow without your involvement? You'll only know that if you look at their customer acquisition record. Things like that, really. Just think, well, what do I want to know for me to feel safe? And you kind of come across those questions yourself,
Just add to it, and it's probably advice to myself, but I think don't get hung up on one deal.
No, don't get move on. I mean, if everyone's starting to get deal fatigue, which happens a lot, then you probably should just move on. If we're negotiating, and it's all becoming very protracted and complicated, just move on. Yeah, because you're spending it's opportunity cost as well. So business buyers, or they'll have a bit of money behind them, and that money's sat there doing nothing. So don't get hung up on a deal. That's a good piece of advice, actually. Yeah,
that's probably advice to myself when I watch it back. Yeah. So are you looking to raise finance now? Are you looking to invest as an angel investor, or do you just want people to leave you alone and crack on?
Just want people to leave me alone. I mean, I'm always happy to help people. I help a lot of people for free. I don't charge for that sort of stuff. It's just having the time to do it, I suppose. But I'm not looking for any angel investments at the moment. I'm sort of at capacity, but as I get out of those things, I do look for them, because I think they're a great way to. I mean, they take a long time, and then you can't make massive amounts of money doing it, I suppose, unless you get those unicorns. But so when I'm out of one, I'll look for another. In terms of, I'm not raising any finance. I'm just here to speak to you, mate. To be honest, I'm not trying to sell anything, which hopefully is a breath of fresh air to people. But yeah, no, just happy to talk to people that are doing the same thing, and share ideas.
Mate, thanks so much for coming on.
No worries. Thank you so much for having me.
If people want to sort of follow your journey, where can they go?
Online, Facebook. I do most of my stuff on Instagram and LinkedIn. And my handle, I try and keep the same. It's Nathan J Winch, the letter J. So that's, if you want to find me on platforms, that's where I am.
Appreciate it, mate. Thanks so much.
No worries. Thank you very much.